Yo, what up everyone? In this video, I want to go over a very simple trading technique slash mistake that a lot of traders make about market conditions. For example, today was a balanced market, and I want to go over how to adjust your trading to make it work out and fit what the market is currently telling you. A lot of traders actually don't realize it, and it may be hurting their trading. It's very easy to fix, and I'm confident you're going to understand it by the end of this video. Before we get into it though, I would appreciate it if you could literally smash that like button for me. And if you want a very good trading resource, I'm going to link my Instagram in the description below at InvestaTrade. I recommend following this. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below. You're missing out if you're not following it. But now let's get right into the video. I say this all the time, the market is the storyteller. It's constantly throwing different things at us. And for us to be successful and profitable, we have to react to the things it throws at us. You also have to understand as a foundation that there isn't a one size fits all in the market, meaning today's conditions are going to be different than yesterday's conditions. A perfect example of this is if we were to look at yesterday's action, we had a very clear sell-off from supply and an awesome drop on the NASDAQ. Now in this video, I'm going to talk about NQ. I'm also going to talk about ES, but everything I explain, it applies to any market, Forex, crypto, stock market, Apple, Amazon, Tesla. It doesn't matter. It's how the auction moves, but different conditions present different things. Yesterday was a very strong sell-off day, decent range, clear direction, and nice volatility coming into the market. Compared to something like today, it was very flat, it was very balanced, and it was very range bound, consolidated in a very tight period compared to yesterday's action that we were actually traded inside of it today. So the point I'm trying to make here is the market isn't a one size fits all. You have to react to what it's giving you. I'm going to explain how to develop and understand what it's giving you before it actually gives it to you in this video. And you also have to understand that different conditions, you have to trade differently and adjust your entries, adjust your confirmations, adjust your exits to what the market is currently telling you. So the first thing I want us to talk about, and you understand it, is market context. I recently, the latest video drop in the course, I dropped a full market context section, but briefly I want to go into the pre-market plan. I post these every single day in the Discord of context, levels, setups. And we had a NASDAQ, so I'm not trying to predict this, just open to reacting. We're creating demand below her from these levels, and we had supply above that, which I was not a big fan of. Now, the context of today's action was not only the levels, but also it was Veterans Day. This is where market conditions come into play. It's Veterans Day, banks are closed, and the bond market is closed. We may see lower volume today, but just be open to many different scenarios the market presents. We can never predict. In fact, if you try to predict, the market's just going to run you over. Instead, try to react and do what the market's telling you, like I said earlier. So going into the market, not only did we know we were observing Veterans Day, shout out to all the vets, so lower volume conditions usually are present in the market. So that's market context. The second thing is developing the levels. We had supply above on NQ. We also had demand below. Now, I was not a huge fan of these levels. So before the market opens in the pre-market plan, when you come up with your own setups for the day, usually with screen time and experience, you're going to feel what's a good setup and what's not a good setup. It just comes, it clicks over time. And today, before the market even opened, I kind of was leaning more towards on the not a good setup side because of the levels I was watching. There wasn't any chart setups. There really wasn't any clean imbalances, and volume overnight was pretty dead, and there was no clean, convincing action compared to what we saw yesterday. If you think about it from an auction standpoint, we would want those sellers from yesterday to keep putting pressure on those buyers, especially at demand. Instead, we bounced that demand, created new demand, and rallied overnight. So it's all about the auction, understanding buyers, understanding sellers, putting yourself in their position, gauging volume, gauging context, and understanding the overall conditions that we are trading in. So that's the first thing, market context. And if we were to look at the S&P pre-market plan, same exact thing. If I pull up the S&P chart, didn't have any clean zones. We had supply above, demand below, and this action was very flat. It was consolidating, and nothing really looked appealing to me prior to the market open. That's my first little yellow flag slash red flag going into the open. Now, that doesn't mean that it's going to be bad the whole day. Things could change, participants could change, news could come out, and the market could throw something at us. It's completely unstructured, and we could have a clean setup in the first 15 minutes. You just never know. Just be open to many different scenarios. So that's market context. The second point is volume. Volume is the most leading indicator in the market. Going back to this NQ chart, if you were to look, we had an average of 431,000 lots traded today compared to a daily average, which is relatively low, of 522,000. Now, as the market's developing, we actually have a new indicator coming out for Invest the Trade members. Will be posted pretty soon. I'll update everybody. Volume by the time, as the market was opening up, volume was just pretty dead. And you could kind of spot that just by watching price action and developing this deep relationship with price and volume. Now, that's not to say we could have had a crazy sell-off from supply and we could have dropped crazy, but we never got that action. Instead, it was very flat and volume was very low. Now, you have to be able to adapt and adjust to those circumstances. I'm not going to sit here and say there aren't setups when the market is like this. I'm here to tell you that you have to adjust and adapt to those things it's giving us. For example, if we were looking at yesterday's action, it was very easy for us to get a crazy move off of this and to catch a crazy trend. Lower lows were being put in, lower highs. So this was an easy trend that you could have caught. It was a risk-free trade, let's just say, if you sold at the top and rode it all the way down, because the market really never made any sudden rallies. In fact, any single rally got shut down. So now going to today, how this action is different. Yes, we rejected supply like yesterday. Yes, we bounced off of demand like yesterday. But because of the balanced conditions, Invest the Trade members, go reference the balanced versus imbalanced video in the course. Because today was very balanced conditions, you can't have the same mindset as we had yesterday, thinking we're going to drop 100 points. You have to have the scalping mindset. If you took this play off of supply short and played, let's just say QQQ 392 puts, these dropped 53% in a 30-minute period. So you have to have that scalping mindset in the balanced conditions. Quick entries, quick exits. In balanced conditions, if you have a trend type of mindset, you think the market's going to skyrocket up, skyrocket down 100 points, that's wrong. And most likely you're going to stop out of your trades and you are not managing them correctly. So point I'm trying to get across here is it's a simple mistake. A lot of traders go into the market thinking we're going to get a crazy move, when in fact the best mindset to have is have a scalping mindset, especially when the market is balanced, where you enter fast and you exit even faster. It's very, very key, because if you didn't have that mindset, let's just say you shorted supply, right? Let's just say, hypothetically speaking, we got confirmation when the market was selling off like this. We're short at this yellow oval, right? We had our first take profit at demand, and then we maybe had another take profit at the lower demand down here. If we had that mindset, yeah, we took 50% off the position right here. We're still green on the trade. Maybe we're up $5,000 at this point. We're at 50%. If we held on to this position, thinking we would have dropped just like yesterday, another 100 points, 200 points, we would have probably stopped out of this trade in this area right here, right? So fix your mindset, adjust to the current conditions. Now, intraday action is everything. In the first half hour, in the first hour, it's going to give us clear and convincing signs. For example, if we were to pull up the ES chart, let me maximize this. This had demand over here and had supply above. It did not hit supply. But if you were to see the action, first half hour, look at this, dropped, came back up, and we were just consolidating in a tight range. It's very difficult to see after the fact. But if you were to look, this is a 5-minute candle and the market moved in a 6-point range. Whereas yesterday, we rejected supply perfectly. I mean, look at that supply rejection, and we sold off 50 points. So now in a 5-minute period, we moved in a 5-point range in the first, 15 minutes, when usually the most volatility and volume is present in the market. Then we sold off, we broke below the low, It's very important to put your head in the perspective of a retail trader. Understand where participants are getting short and understand where participants are getting long. When the retail traders are in the most pain, that's when the smart traders, which I'm trying to help all you do, are going to get the most gain out of it. So a lot of people are thinking, right? Oh, I'm comparing yesterday's action. Keep in mind, we're still in yesterday's range. If we are inside of balance, you are never going to get a clean and clear follow through move. It always happens out of balance. We broke below the low. If you were in the mindset of a retail trader, I'm shorting the low at daybreak. It's breaking below support. It's breaking below this pre-market support as well. Not realizing we have demand. We break the low. Yes, we bounce off of demand, but volume is very low. This is a 7-8 point rally off of demand. Contracts, I'm sure, went up 20-30% in a 15-minute period. But still, if you had the mindset of, oh, I'm trading 10 contracts and I want to get a 20-point move off of this demand zone, I think we're going to rally all the way up here, or we're going to rally all the way up to supply, you're not going to get it. And what's going to happen is you're going to adjust your position size thinking we are going to get that rally, and it's just going to bite you in the ass when you do come back down and you probably do stop out of this position after you don't get more fuel to the upside. Same thing with this. The market is designed to trick us at all costs. It's designed to find out where we're trading, understand where we're getting long, and we're providing liquidity for other traders on the other side. For every buyer, there's a seller. For every seller, there's a buyer. There's never more buyers than sellers, no more sellers than buyers. There's an equal participant to every transaction. It just shows who's aggressive and who's passive. Market starts coming up. We start seeing traders thinking that they're going to break out. Volume starts coming in. We're still inside of balance. Yes, we bounced off of demand. And I'm not going to lie, this chart looks extremely bullish. If you were to pull up the NQ chart, this chart looks like we're bottoming out, right? And we're going to start to break out to the upside. But keep in mind the current conditions. Very flat, very balanced. If you aren't aware of this, you are going to think the market is going to break out. Key word right there. Think. On these types of days where the market's balanced and we are lacking volume, your emotions will get the best of you and your brain will start tricking you into different possible scenarios, and you're going to force something when something really isn't there. Our emotions play tricks with us. The market plays tricks with us on balanced days because balanced is equal participation in the market. I see balance as a big move is coming pretty soon because maybe a big trader on one side of the market is leveraging into a position, getting ready maybe to unload, accumulating, maybe getting ready for a solid move. So this does look like it's ready to break out. Volume coming in, nice candle to the upside, and boom, immediate fake out. I see this as grabbing liquidity to the upside. Retail thinking we're breaking out above VWAP, nice volume coming in. And boom, we automatically fail, come back into demand. Let me move this. Bounce briefly, come back into it, bounce briefly, come back into it, and close, right? So it's just an endless cycle of up, down. We moved in a 14-point range today, whereas yesterday we moved in a 14-point range in a 10-15 minute period. 6.5 hours of the market open, and we moved in a 14-point range, whereas yesterday we saw that in a 15-minute period. So the point I'm trying to make in this video is understand your conditions, trade accordingly to different conditions. Don't trade the same in an imbalanced market as you would a balanced market. It's just not going to work out. Balanced markets, you are prone to your emotions doing the trading. Your emotions are going to get the best of you. Let go of your emotions, less thinking, more doing, and a lot changes in your trading. So I'm going to leave you all off on that note. If you like this video, I would appreciate if you could just smash the like button, subscribe to my channel if you're new here, and if you want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord. I plan on adding a tape reading section by the end of this month or the start of December. But on that note, I'm ending it. Peace out.